Here's a new full Forex and commodities weekly outlook with our technical analysis, fundamental analysis, and exact trade setups for US 30, GBPUSD, EURUSD, USDJPY, GBPJPY, gold, silver, and oil. This week is going to be all about the Fed, inflation, oil prices, and market sentiment. And I'm going to show you exactly what's happening, why it's happening, and how to execute trades using price action, liquidity, and the institutional setups that we look at. So let's start off with the most important driver of this week, which is going to be oil. We've had a major move due to the geopolitical tensions, pushing all the way up into almost that 120 level, and that is pushing inflation expectations even higher. Now, at the same time, growth is slowing down. So the Fed is now stuck between cutting rates or staying hawkish. And that's why we see that all across the board, whether you're looking at equities, commodities, currencies, whatever, the markets are pretty much choppy because right now everything is waiting for the Fed, and we're supposed to get interest rate news coming out on Wednesday from Bank of Canada, the Fed, and then we also have interest rates coming out from Japan, the Eurozone, and from UK as well. Now, let's take a look at US 30 as well, and we're going to do a full technical analysis, but I want to show you guys the overall macro backdrop of what's happening. Now here, what we also see when you're looking at any of the major fundamentals, articles, and all that stuff, I'm basically summarizing it for you guys here. Basically, the bigger players, the institutions, especially like JP Morgan, Goldman Sachs, a lot of the hedge funds, they're all starting to position here now. We're seeing that money is moving into bonds, which tells us that the market expects rate cuts later this year, even as early as June now. But at the same time, equities are stalling. And that tells us that the institutions are reducing risk slightly and waiting for confirmation right before the Fed releases the interest rates. And they're not fully bullish here, but they're also not fully bearish. Now, the important thing to understand when it comes to the Fed decision is that the actual interest rate data itself is not going to really move the market. We already know that they're going to maintain the interest rates. What matters here is the forward guidance. What does Powell say about how the war is now impacting inflation expectations, and how long are we expecting that the Fed is going to hold on to those interest rates? Next interesting pair here is the EURUSD, where it shows that the dollar has obviously been strong due to the war, which is why EURUSD is now trending lower, even on higher time frames. But we're also starting to see that the move is starting to slow down after tapping into almost that 1.141 area, which tells us that the dollar is now waiting for the Fed decision as well. So now this is the third pair that's basically confirming the fact that the market is waiting for the Fed decision. Let's also take a look at gold. Also on daily time frame, we saw that gold is now starting to pull back after tapping into that 5,400 mark, but this is not weakness. This is profit taking and consolidation. We also see that silver is more aggressive instead of gold. We see a strong move up, and then we see a sharp correction coming right back down. So both metals are now also waiting for direction from the Fed. The only thing that matters this week is going to be Powell's speech, not the actual rate decision, like I said, but rather the forward guidance. And that's going to determine the direction all across the markets. For example, if we're looking at gold, if the Fed is dovish, then we're going to get that risk on sentiment. So we're expecting that gold is going to dip down even further, and equities like US 30 will be pushing right back up, which makes sense from a technical perspective, given that the equities have just tapped into a major support level and a demand zone down here. But if the Fed is hawkish, then we get a risk off sentiment. So we're not really predicting any moves here, but rather we're trying to position ourselves based on these key levels and what the market is doing based off of higher time frames. The technicals are setting up here, showing us exactly what is happening in terms of the bigger institutions and their positioning, and we are getting ready to react of wherever price ends up moving here. Now let's talk about, since we're on US 30 already, let's go ahead and mark up some of our key levels. We have a key support right into 46,400. And then drop down to the 4-hour time frame, because this is where things are getting a little bit more interesting. This week, again, we're not entering trades randomly, but we're only going to be using 3 models here, which is going to be the liquidity sweeps, which you guys are, you have learned about in the accelerator already, but we use it in terms of just support, resistance, and then wick rejections and things like that, instead of, getting too fancy with it. But here, basically what we're looking for is price pushing back down, sitting in consolidation at the moment, pushing back down further, potentially giving us some massive wick rejections right into the support of 46,400, even 46,600 area, and then continuing back up. If I were to mark up exactly what type of moves that I'm looking for a classic liquidity sweep right back into this demand zone, and then a push back up, again, dependent on whatever the Fed ends up saying, whatever, Powell ends up saying. If we're on that risk on sentiment, then maybe even going into tomorrow and early New York session on Wednesday, I'm expecting that there's going to be massive wick rejections. Price holds onto a support into 46,400 and potentially a little bit deeper than that, maybe coming back down into 46,000 flat and then reversing right back up bullish. That way we are targeting these next key levels at 48,000. So that's going to be a major level that I'm going to be watching out for. And I'll show you guys exactly why as well, because when we mark off that 48,000 level, zoom out, look to the left, and that's the key level that price has reacted off of heavily in the past as well. If you hop up to the daily time frame, that was a previous daily resistance right here before a massive sell-off, once again tapping into closer to that 46,000 level before a bounce back up in November. And then after that, price kept tapping into 48,000 before a rally up, tapping into these all-time highs. When we came back down, we rejected right into that 46,400 area, came back and respected right into 48,000. So what I'm expecting is that price can potentially do some liquidity sweeps coming back down further, closer to that 46,000 mark like it has here in the past, and then continue pushing back up and look for those buys to come back and tap into that 48,000. Once we tap into that, that's going to be the key level here once again. But if the market starts getting ready for any potential risk off sentiment, then we're looking for price to push back up again once into that 48,000 level, get closer to that as we get closer to Wednesday. Then we're expecting a push back up anywhere into that 47,500 area. Let's bring that up a little bit more. 47,500 area, even closer up into 48,000, and then make wick rejections, end up creating a new lower high formation, and then push right back down into 46,400. This is a very strong support level. Overall, we need to see we're going to see potential manipulation happening at this 46,400 area. And if we're going to look for any further sell opportunities, we need to see a retest right into 46,400 and then push back down for any further sell opportunities targeting these previous areas here to the left. So we are setting up with great opportunities. It's just a matter of waiting and watching for what the market ends up doing here. Even when you're looking at the 1 hour time frame, overall, we are sitting in that consolidation. So that is why I'm expecting that this is going to be another classic liquidity sweep move. And if you go back and back test, every time interest rates are about to come out that week, you will see massive wick rejections. You will see a lot of consolidation formation. You'll see massive wick rejections in either direction, and then a push coming right after that. Next pair that we're going to go over here now is going to be GBPUSD. Same thing, let's come over to the daily time frame, and we see that the last daily candle made a bottom wick rejection right here, and then push back up. We have a new daily candle that's forming. Same thing here. This is going to be 1.322. Look at where price is rejecting at the moment with the previous top wick rejection on the daily candle, which is right into that 1.334. And that is previous consolidation as well. So between US 30 and now this is a second pair, that's confirming the fact that now the market does not have a clear direction just yet, but it is starting to position itself. So we just need to be a little bit more careful about these potential moves. When we come onto the 4 hour time frame, we see that there is this bearish structure. Obviously, that is due to the dollar gaining strength. In times of war, price pushes back up into that 1.334 or even 335 area, and overall just sitting in this consolidation. So that's another thing that we need to be careful of as we get closer to Wednesday. We can potentially see another push up. So these are going to be our quick scalp opportunities, even day trade opportunities, depending on the type of entry that you end up getting here. But this is the overall zone that we need to be careful of, because as soon as price taps into that, now you are testing the intraday structure. Price can end up creating a new lower high formation here, and then we can see a potential sell-off right when interest rates are released. So this could be a move going into Wednesday. So you have all of London session, you have all of New York session. So you have about 2 London sessions and then 2 New York sessions right before interest rates are released, and then you see a pushback down here. That is, again, going to be based off of any potential risk-off sentiment. If there's a risk-off sentiment, you're going to see the dollar gaining more strength. If we move into a risk-on sentiment, then we can see a push up closer to this area. And then that risk-on sentiment is going to give us enough volume to break past this intraday structure. We just need to see a confirmation here based off of the 1 hour time frame, even the 4 hour time frame. And then we're pretty much clear to come back into this 1.3455 area, or even higher than that, coming back closer to 3.5 area here flat. And then the next target is going to be up top here, but for that to happen, we need those continued positive fundamentals and economic data. But if we get the risk on sentiment purely from the interest rate release, then we're definitely targeting that 1.35 area for GBPUSD. Same exact idea here on EURUSD as well, tapped into a major daily support level, as you can see to the left. You've got that 1.141 area. You can hop back up to the weekly time frame, and that will confirm the fact that this is a very strong level. So right now what price did was push above it, consolidate out, ended up creating a bit of a lower high formation based off of the structure here, but came back and tapped into these previous highs, rejected that pretty hard. It came back down with, of course, the fundamentals and the geopolitical tensions. Again, the dollar gaining more strength here, came back and held onto a support. So the important thing to notice here is that even with those fundamentals, even with the dollar gaining strength, EURUSD did not just break through these major support levels. Instead, it's coming back, respecting this level, and now everyone is pretty much watching for what the Fed is going to do and what the forward guidance is going to be there as well. Now, when we're looking at the daily time frame, you also see that price is coming back into these previous support levels, which was previous resistance, and we're kind of just tapping into that, and that's where we're sitting right now. When we come onto the 4 hour time frame, you've had a nice seller's opportunity, some nice bearish trend here as well. Price held onto a support, push back up, and then today we're just rejecting into this level here once again. So pretty close to the setup that we see on GBPUSD, where it is a bearish trend on the intraday levels. So not much has changed there. And then if we're looking for, again, that risk on sentiment, then we're expecting that price is going to break these previous highs. So we're just looking for a movement like this and then take us right back up closer to that 1.16 area or even that 1.165 area. Once we tap into this level, getting closer to Wednesday, we're expecting that price is going to be reacting off of these previous areas right here, closer to that 1.16. And then if we see, actual risk on, push back up even further into that 1.165. But if we end up seeing a risk off sentiment, then there's a very high chance that we look for those further sell opportunities to come back down. Another thing that could happen here with GBPUSD and EURUSD is that we could just end up consolidating below these key zones here until we get the actual guidance, and then we figure out what is the direction on both of these pairs. These are major pairs, so I like to use them for swing trading opportunities because US30, GBPUSD, or GBPJPY, USDJPY, and gold are going to give me better scalp opportunities and day trade opportunities. So I'd rather keep the major pairs for my swing trades instead. Now, this pair here very specifically depends on risk. If we go risk on, then again, we're looking for dips here. If we are looking for a risk off, then again, we're going to look for massive rallies to continue. Now, based off of the daily time frame, we have support formation pretty much right into that previous consolidation area here to the left. 211.2. Obviously, some clean bullish pressure here to the upside. This is going to be our range for this week, coming into 213.2. Come on to the weekly time frame, and as you can see, we are approaching some previous very strong levels to the left here as well, which was back in 2008 is when we had tapped into that area. And then after that, we've never really came back down to revisit that area until now. So that tells us that fundamentals are going to be extremely important. And then even based off of just pure candlestick anatomy, looking at the weekly time frame, we do see that we do have some bullish volume here, but we don't have enough conviction that we're going to keep pushing and breaking these previous highs unless we have the fundamentals on our side. Now we come on to the 4 hour time frame. Here we see that after a consolidation down here closer to 211.2, which is previous rejections, price broke above. On the 4 hour time frame, we do have a break and retest formation here. So that tells us that going into London session, we can look for those potential buy opportunities to the upside, coming back closer into 213.2, even closer to 212.5 first. that's going to be our target area. And then as we get closer to 213.2, that's going to bring us even closer to the actual Fed release. And then we're waiting for, what the price reactions are going to be at this level. If we move into risk off, then we're expecting the yen to gain more strength, which is going to push this pair right back down. If we start moving into more of a risk on sentiment, then we can continue pushing above 213.2 and then ultimately targeting these previous highs here at around 215 area almost. Drop down to the 1 hour time frame, holding on to a nice support. So going into London session and even New York session tomorrow, I want to see these highs here being broken, continue to create those higher high and higher low formations on lower time frames, and that's going to be pretty much the setup that we're looking for when it comes to scalping GBPJPY. So quite simple so far. And then coming over to USDJPY, same exact thing as GBPJPY, where when you zoom out, you see that we're sitting at all-time high levels and previous levels that price tapped into. That's when the fundamentals pretty much came in and pushed this pair right back down. The key thing to understand about USDJPY here is that these are two safe haven currencies that are pretty much against each other. US dollar has a little bit more strength given that it's the world reserve currency. And then the yen, of course, is the first place that investors flock over to whenever there is any sort of economic uncertainty. So we have very two strong fundamentals for both of these pairs, and we're seeing that a lot of the investors are flocking over to the US dollar a lot more, hence this movement to the upside. But we do see a little bit more choppiness when we drop down to the lower time frames. Coming on to the daily time frame here, pretty close to that 160 level here almost. So right now we're sitting in very risky waters when it comes to USDJPY. Drop back down to the 4 hour time frame, and you see that anytime price pushes back up, you see a little bit of consolidation or some quick retracements, but we're still in a bullish structure here to the upside. So this pair is going to be quite volatile whenever the interest rates do come out. Another level that I'm going to mark off here is going to be right below this bit of a consolidation support. If we're looking for sells, I want price to break below 158.85 area, push back down further, and then I'm going to be targeting right into this previous support area here to the left. And that is about 116 pip move to the downside. For any buying opportunities, of course, we want the 160 level to be broken, but as soon as that is broken, you're going to be coming back and revisiting into these all-time high levels, which is going to be closer to around 162 level here based off of the daily time frame. So this is one pair that I'm watching this week, but I will not actively be trading because we have better setups on US30 and then some good setups setting up for EURUSD, GBPUSD for swing trades, and then better scalps and day trades for GBPJPY. Now we have gold based off of the daily time frame. Last daily candle closed week bearish. That is at 5,004.7. Hop back up to the weekly, and you see that that's the current weekly support level for the last 3 weeks here almost. And then based off the daily time frame, the next level that I'm going to mark off will be right around here, which is 5,092.7, previous resistance, previous support here. As price breaks the previous highs, obviously we're looking for buying opportunities to the upside. If the Fed is dovish here, I want to see basically price creating some bottom wick rejections. Again, quick liquidity sweeps. On lower time frames, we see the 4 hours consolidating. We see that the 1 hour is also consolidating. So what I'm looking for here is price to come back, create a massive bottom wick rejection, potentially sweep the liquidity from down here, and then continue pushing back up bullish. And I'm looking for that buying opportunity to the upside, which can ultimately bring us back closer to that 5160 or even 5200 area right up top here. That is only when we're moving into a risk off sentiment and the Fed is dovish. If we're seeing that the Fed is in a risk on sentiment, then obviously we're going to wait for price to create some sort of top wick, come back and respect into these areas here, and then continue pushing back down further. In terms of scalps, obviously we know that price is going to for sure push back up bullish. Now it's just a matter of how high can it go. So in terms of scalp, we just need price to break out of this 4 hour consolidation. And then as that happens, we can look for scalps coming back closer to this 5063 level, 0.5, or even closer to the 5092.7. And then that is going to be the key level that determines, whether we're risk on or risk off, depending on what the Fed says. And then it will determine how far up bullish price can continue pushing. If we see that the Fed is coming out and they're saying that they're risk on, then obviously we close out our positions, our buying positions here, and then we start looking for sell opportunities to come back down closer to that 5,000 mark. But if the Fed continues to be risk off and they're saying that, it's data dependent, the economic outlook is uncertain, and then they also, overall just show that they're dovish, then we're looking for those, that push right back up when it comes to gold. For all of these pairs overall, if the setup is not clean, then we're not going to be trading it. So we definitely need some clean closures outside of these levels before we can start looking for our trading opportunities. Silver is going to be quite similar to gold, just a little bit more aggressive, where you have the previous daily candle that closed bullish here, the current one making a bottom wick. So we still need to break the previous high before we can continue pushing back up. This is 79.82. The area that we want to be targeting for any buying opportunities is going to be 84.82. Drop down to the 4-hour time frame, same exact thing as gold, where price is consolidating at the moment. So we want price to break out of this completely, look for those buying opportunities getting closer to the $84 mark, and then same thing, wait for what the Fed says, the guidance and the press conference, and then we're expecting more reactions closer to the $84 mark. For any selling opportunities, we want price to completely clear below these wick rejections and then continue pushing down. As that happens, the next area of target for clean moves is going to be closer to the $72 mark. Now let's take a look at oil. Oil, we had a massive push up into the $100 mark. We also saw massive volatility all across the market when that did happen. And then we also talked about this in our free newsletter as well. So if you guys have not signed up for it, then you can sign up for it on the SharpFX website. But we talked about how if oil were to push above the $100 mark, then we would see equity selling off. We would see a lot more volatility in the market, which is exactly what happened here. So oil is going to be completely headline driven here. We're not really going to be predicting any directions here. We're simply going to be waiting for reactions. So based off of the daily time frame, what we have is a support right now that's being formed at that $94 mark. Even though we spiked above that $100 mark, we did not close above it. So I'm just going to keep it at a clean 100. I'll back up to some of the higher time frames. Look to the left. That $94 mark is a very strong resistance here, as you can see. And then the $100 mark is also a very important level based off of higher time frames. As we zoom out and look further to the left, you see how that overall is just consolidation. Price just respecting this area as resistance, support here in the past. So we need to see clear candle closures in one direction or another prior to looking for a trade here. I'm only going to be using US oil price action here to kind of figure out what is the market sentiment, the positioning for the rest of the pairs. So I'm not actively trading US oil here, but just trying to figure out, in terms of positioning as oil continues to push back up, that's going to further confirm the fact that we're seeing more inflation and the Fed is going to continue holding on to the interest rates. Right now, we have pushed back the expectations to potential rate cuts in June. But if oil continues to push closer to the $100 mark or even higher than that, then we might see that the Fed is going to hold on to interest rates even longer. Rest of the central banks are also going through the same exact problem when it comes to BOJ. It's going to be the same exact thing. Bank of England, European Central Bank, same exact thing. It's just that we are focusing a little bit more on Fed this week. So overall, before the Fed, we have great scalps and day trade opportunities, but I will not be holding on to any swing trade opportunities going into Wednesday. After the decisions are released, we are going to be trading and executing based off of the reactions to these levels that we have created on the daily time frame and the weekly time frame. Again, if the Fed is dovish, then we have some buy setups that are setting up across some of the safer haven assets. If the Fed is hawkish, then we have some more sell setups that are also coming up. So everything is going to be completely conditional on what Powell ends up saying during the press conference and the forward guidance as well. So make sure that you're not just trading based off of guessing what the market is doing. You actually understand what's happening fundamentally. You actually understand in terms of market sentiment and how the positioning is happening when it comes to, JP Morgan, Goldman Sachs, some of these bigger players. And there's articles. So if you go to Bloomberg and you just type in, Goldman Sachs and then some of these pairs of whatever's happening, you will see actual articles. So there's analysts who have published reports on all this stuff. So wait for your liquidity moves, wait for your confirmation, and then execute based off the reaction. If you found this helpful, make sure that you subscribe, and I'll see you guys after the Fed rate decision.